Hey, everybody. Thank you very much for joining us today. A pretty exciting topic in artificial intelligence. The concept of agentic AI is kind of new, kind of pretty exciting. The stuff that it's able to do for people in the world of finance and in the world of this work overall. We've got our CEO and co-founder of Boosted.ai, Joshua Pantony here, and I'm going to hand it over to him to talk about the promise, the excitement, and how to use generative AI to your advantage. So thank you very much, Josh.
Excellent. I'm going to give 30 seconds for a few more folks to show up. And in the meanwhile, Fraser, if you could give me the ability to share my screen, that would be fantastic. Cool. So I'm going to structure this a little differently than how we've done some of our historic calls. And then I'm going to give a little bit of a high-level overview of kind of what's different versus what's existed before to set the baseline. But I'm going to spend the vast majority of the webinar actually showing a demo. And as I'm showing that demo, walking through different examples of how this is useful, applicable, and can be integrated into different investment processes. We have a very wide base of users. Today, we have over 300 users, including some of the biggest asset managers in the world. And the types of use cases that we encounter are also very varied. We have users that have 20% turnover, focus on 5 or 10 names, few trades in a year, and are really focused on sort of long-term buy and holding. We have quant users with extremely heavy turnover, that turn over as much as 100% of their book in a day. And then we have users that are kind of any flavor in between. And so as a result of that, we've encountered quite a few different examples of ways this technology can be valuable. And we want to basically showcase some of what that could look like. So at a high level, I'm going to start by talking about what is agentic AI versus historic AI. We're going to go from there into some examples of how we think this could be disruptive. And then I'm mostly going to just jump right into a demo, showcase a bunch of different examples of how this could be valuable. And at the end, we'll take a whole bunch of questions. So with that said, just to kind of like set the baseline, obviously the concept of artificial intelligence has been around for a long time. I got started in this space way back in 2008, 2009, when AI was still a taboo word. We used to call them statistically based techniques. But the way I sort of think about it in a modern sense is you've got your traditional AI systems that did a very good job at handling sort of numerical and structured data, at least from a financial standpoint. That was really, I think, when you started seeing the first adoption of this. And then over the past few years, generative AI has really become, I think, technology where you can express in text some concept or some set of information to a machine. You can basically prompt a machine and get it to do some set of work. And it's usually you give it one question and you get one answer. And the way I like to think about agentic AI is we're moving from a world where you have to prompt the machine to a world where the machine learns your needs, learns the types of things that are valuable, does some work independently in a continuous basis. And ultimately, we move from a world where you're prompting the machine to a world where the machine is effectively prompting you, where it's finding and surfacing up a valuable key piece of insight that you couldn't get without a system like this. And sort of just taking a step back, every time there's been a major shift in technology, you see a change in the kinds of workflows that are possible. And I would say across my career, the biggest change has just been in the amount of data and the way data is processed. Back in maybe 2001, there was maybe 60, 70 sets of data that I think were really, truly valuable in this space. Jumping forward to today, we grab data from over 200,000 sources, and we're grabbing that data on a continuous basis, real time, and able to conduct analysis on that. So you've seen this massive shift. And I think kind of what's happened and kind of what I'm seeing basically across every kind of manager is we're now really quickly entering a world where there is just a huge amount of information on a continuous basis. And the hardest challenge is actually where to focus your attention on that information. And that problem really has just been getting worse and not better. And I think where we're starting to see this very interesting thing with agentic AI is when you can start to teach a machine what matters to you, and you can start to teach a machine to carry on some piece of work on a continuous basis, it actually becomes a way to sort of exert agency on the set of information that gets filtered to you. If you can teach it, I'm a fundamental analyst and I think about things from this standpoint, or I'm worried about risk to credit, or I'm worried about any risk to this M&A transaction happening, or things like that. Once the machine sort of understands your thinking, once you kind of download your brain to the machine, and you can then have a machine work continuously, it can cover information, it can cover analysis that would be hard to impossible for a human to do on a basic level. And that starts to really change what some of the workflows can actually look like. And just kind of at a high level, I sort of think of agentic AI as really adding kind of a few different types of value. One thing is taking a task that's being done on a continuous basis and automating that task. So as an example, if you maybe need to do some commentary on a portfolio, if you need to do some kind of analysis on risk attribution, you want to understand the type of regime you're in, you want something to be sort of doing some basic analysis to do on a continuous basis, that's something you can use this thing to do to sort of save time. I think the other way to think about it is you may have some process you're following today where you're spending a few hours a day on it, and maybe you cover 20 stocks, maybe you cover 200 stocks, but it's impossible for you to read all pieces of context. It's impossible for you to read every earnings call in the S&P 500. It's impossible for you to read every SEC filing that happens for every company in the R1K. Having a system that can continuously monitor, understand all that information, and then notify you when there's something worth looking at can be really valuable. And then I think the third way I like to think about it is it lets you do analysis that was not possible without this technology. Really good example of this is if you think about the Blackwell chip delay that occurred a few weeks ago. Today, if you cover NVIDIA, a lot of people would be looking at maybe sell-side reports about NVIDIA. They'd be looking at any kind of information they could get from the company itself directly. But if you had a piece of technology that could read through every earnings call of every company in the world, find any earnings call that mentions the Blackwell chip delay, figure out what kind of disruptions the chip delay is causing, and then also figure out if those companies are still bullish on working with NVIDIA or not working with NVIDIA, that can change how you actually do your analysis. That would be something that's highly valuable that you would have loved to be able to do. It was hard to do before this type of technology, and now you can do it in a very big way. So I think about it in terms of finding sort of simple, easy tasks that can be automated, monitoring the world on a continuous basis. And then the sort of third category is actually changing your process to add net new information that would have been very difficult to add without a machine that's able to scan through oceans of data on a continuous basis. So that said, I kind of think of this across a number of different high-level categories. There's agents related to monitoring changes in information. So as an example, if you do M&A arbitrage, maybe you could set up an agent to actually continuously look for any change in risk to a deal. If you're looking for opportunities in a particular space, maybe you could use this technology to find any companies that are issuing new shares, doing more convertibles. Another sort of category is thinking about this from more of a macro analysis. So if I go through and maybe I want to read through every earnings call in the S&P 500 and find any new sort of like emerging macro trends. If I'm doing due diligence calls, I want to do some work ahead of time, filtering stocks, etc. And I think with that said, I'll circle back to this, but I'm just going to jump right into a demo. So really what we're trying to build with Boosted 4 is, which we call Alpha, is a piece of technology that we want to feel less like an application and more like a team of AI workers that are doing some kind of work for you on a continuous basis. And so this is my dashboard. And in my dashboard, I have a whole bunch of these agents that I've basically taught to do some type of task that's important to me. So I have an agent here that is basically scanning through every company in the S&P 500 and finding any company that makes a change to one of its M&A plans. I have a system agent here that's basically going through, scanning every earnings call in the S&P 500, reading all of them, and trying to find new and emerging macro trends. I have another one over here that's doing a deep dive analysis on the infectious disease space and different leaders in that space. And for each of these, after I've sort of taught them, here's how I think about this task, they're going to do that work on a continuous basis, and they're going to notify me if they find anything important. And so for this first one, as an example, this was going through and reading through every company in the S&P 500. And it's going through and basically looking for what it thinks the biggest emerging macro trends are over the most recent earnings cycle. So the biggest things it found was around consumer spending and inflation, interest rates in the housing market, digital technology advances, supply chain and inventory management, geopolitical and market-specific challenges, healthcare, pharmaceuticals, infrastructure, reshoring, et cetera. And then the kind of powerful thing about this is for each of these things, it's going to cite both the set of companies, but also here's the specific documents, here's the specific news, here's specific 10Ks, 10Qs, 4Ks, whatever, earnings calls that it thought was interesting and relevant for this particular problem. And so these are all examples of companies, and here's examples of documents where it got this information from. I have another one over here where I'm basically looking for any emerging or new changes to existing M&A plans. So this one found a few different examples, same kind of thing. It's going to cite some examples of news, some examples of something that might have come from a 10K or 4K, 8K. And on a continuous basis, as it finds new opportunities, it's going to ping me and it's going to notify me. I've got another one over here that's doing an analysis on Dexcom's positioning in the glucose monitoring space. And the way you kind of build these automations is just by talking to the system. So I came in here and I told it, I want you to evaluate if Dexcom is a leader in glucose monitoring systems. Had a few interactions. I asked it to throw in some sell-side reports as part of this analysis, a few other things. And then it ultimately builds out the system known as a work log. So behind the scenes, it evaluated, is this thing, how strong of a leader it is. Thinks it's actually not that strong a leader. It did this by looking at KPIs for Dexcom versus its competitors. It's going to cite the specific KPIs it brought. It looked at specific products that Dexcom has versus its competitors, showed the different stats for each of those products. Did a quick evaluation on the news, did a quick evaluation on earnings for these companies, did a quick evaluation on any sell-side information it had. And kind of behind the scenes, this was done in a sort of continuous basis in a way that it really sort of showcases exactly how it worked. So I said originally, I want you to evaluate glucose monitoring. It's going to create this continuous set of work where first thing it does is grab the Dexcom stock ID. Then it's going to go out, find peers in the space. It's going to grab news over the past month. It's going to get earnings summaries for it versus its peers over the past month. It's going to get what it thinks are the relevant KPIs. For each of these things, as it builds out this automation, it's going to showcase exactly what it did at each step, which both A, gives me the ability to audit, but B, also gives me the ability to basically work with the machines and modify any bad behavior. So if in here I didn't like the set of competitors it had, or I thought it should be focusing on European competitors, or I don't want it to look at sell-side reports, or I think it has the wrong KPIs, or I'm purely fundamental and I don't actually want it to look at any numerical data, you build those automations by just talking to it, by just explaining to it, this is what I want you to do. And so with that ability to kind of have the machine work with building out the automation, the ability for you to actually kind of work with the machine to build out the automation, it gives you the ability to kind of download your brain into the machine and then have the machine scale up that thinking. So this is an example of looking at Dexcom from a numerical standpoint. Totally different direction. Here's an example of an automation where, this particular case, client was looking at Diamondback Energy's acquisition of Endeavor Energy, and they have an M&A arb strategy around it. And the question is, tell me anytime something happens that could cause a spike of risk to this deal occurring. So this thing's doing that, analyzing it continuously. It's going to look through any kind of corporate filings, any kind of news, any kind of regulatory information. And found recently there's FTC is investigating a bunch of companies, including Diamondback, potential collusion with OPEC. Kind of click into this, see the sets of information. Some stuff related to insider trade selling, et cetera, et cetera. So it's continuously sort of analyzing everything happening with this, with the possibility of an acquisition. I've got another one here that's doing kind of an analysis on China. And same kind of thing, looking through earnings calls in China and trying to find what are some of the big emerging macro trends in China. So there's a big steel crisis happening. There's a bond market crackdown, appreciation of the currency, stock downgrades, et cetera. It's the same kind of thing. I can click into these. And then after I do this, the next step might be to sort of ask myself, okay, if there's a crisis with steel in China, what are the kinds of companies that might be affected by that? So then I can build out another automation where I come in and I say, all right, find me sets of companies that might be affected by dropping domestic steel demand. It finds a bunch of examples of companies in China. And the really sort of powerful thing with this is you'll see that it's able to both grab North American data, but it can also look at Chinese data, Chinese websites. And this can also be relevant even if you're covering North American stocks. So if I cover a company like NVIDIA, as an example, a huge portion of ownership actually comes out of China. And so if there's Chinese coverage on this that you don't have access to here, or that you're not incorporating as part of your process, you may miss something. So this is an example of an automation where, every time they meet with management, they're going to have a set of questions that they want to ask. And you're probably going to know 80 to 90% of the good questions, maybe 95% of the questions. Probably the vast majority of the time, you're going to know your names better than the machine does. But the machine might find something, some key piece of information that you maybe missed or didn't find somewhere else. And so in this case, it went through, it's going to look at a bunch of different high-level categories, suggest different things to talk about. But the really powerful thing about this is one of the sources it picked up on was actually some Chinese coverage of the stock that tends to focus on a lot of things happening in China, such as local automotive companies, what's happening with chips, and NVIDIA's progress in trying to get chips that pass the ban. And so, as part of this, you come in, it's very, very simple as a user. You just ask it, go through my documents, suggest a due diligence agenda, and away you go. But then the system's able to kind of scan through anything, including foreign language, and suggest different information, and then actually showcase to you, okay, here's the parts of the document that were relevant and interesting. Here's a quick high-level summary, and then some more details on things that might be interesting for you based on the query that you just asked. So it can become a way to think about research. It can become a way to monitor for change. It can become a way to incorporate huge amounts of data into your process in a really simple, easy-to-use way that you don't have today. Jumping in a completely different direction, thinking a little bit more about some folks on the call that might be from a wealth management standpoint, you can also use it to automate things like communication. So I built my automation here that is basically going through one of my portfolios. It's finding the biggest winners over the past week, finding the biggest losers over the past week, and then it's suggesting different sets of stories and information to talk about. So this basically generated a bunch of commentary about each of these stocks that I thought were winners, went through, found the different losers, generated a bunch of commentary about the losers. And and about how and why that seems to have happened. And again, just like before, because I can basically talk and collaborate with the machine, I can get this to build however I want it. I could say, add in a section talking about hockey news. I could say, write this as more of a podcast format. I could say, I want you to do short paragraphs, long paragraphs. I could say, I want you to add in more graphs and analysis, and whatever it is I ask it to do, the machine's going to understand it and build something very catered and very specific. So this is an example of doing it for portfolio commentary, but you can really build automations that could do this work on a continuous basis across kind of anything involving generating some kind of report. So we've got a few folks on the sell side that are thinking about using this for more simple coverage, or if we're trying to add coverage of stocks that maybe aren't getting as much attention right now today. Kind of jumping in a different direction. Here's an example of an automation that's doing a similar kind of positioning analysis. This is looking at JPM's positioning in retail banking. But instead of the Dexcom one that was doing it from more of a quantitative standpoint, this one's thinking about it from more of a fundamental standpoint. So kind of the other powerful thing about this technology is, as you engage with it, as you use it more, it's actually going to learn a little bit more about your tastes, how you think about the world, what your perspective is. And that learning can be really, really powerful. So the previous example I just showed, it's Dexcom, where it's doing it in more of a quantitative analysis. In this case, it's doing it from more of a pure fundamental analysis. So it's looking at JPM's position from a digital banking standpoint, customer experience and satisfaction standpoint, finance performance standpoint, product and service diversification standpoint, regulatory compliance and risk management standpoint, et cetera, et cetera. And then kind of across all of these things, it'll look at JPM versus what it thinks are the biggest peers. It actually thinks Bank of America is a little bit better from a digital banking standpoint. It's going to cite specific news articles, 10Ks, 10Qs, whatever. And then as it does this analysis, again, if anything changed, it'll let me know. There's actually going to be a really good chance to talk about the next really powerful thing about this technology, which is, if you use something like ChatGPT or a lot of the sort of off-the-shelf approaches, a lot of times when you give a query, it'll maybe look at like 3 or 4 articles in order to answer a question. You can do some things like that, but in our view in the financial space, you really need to understand everything. You really need to analyze every piece of text that you can get a hold of, because only by understanding the entire space can you understand when there's new information that's actually value add, that's actually differentiated from the information the market had before. And so one of the really powerful things is, when you put in a query like this, because it's building out this long range work log, because it's building out this long range automation, it can analyze tens of thousands of articles. And so, when I look into these, when it does its citations, it's not just showing 1 or 2 articles, it's actually showing like a bunch of different articles or a bunch of different documents that are all kind of aligned with the set of information that it's showing. In fact, you can actually look at just how much information it looked at. In order to do this one analysis on JPM, it looked at 11 million words, actually almost 12 million words, in order to be able to do this analysis. And that's something you really need a system like this to be able to do, something that can actually analyze very long range information. And I guess just while I'm on the topic, the other thing I think that's really powerful about how this is getting set up is it has some ability to sort of fact check itself. So the way the technology kind of works behind the scenes is we have a system that is understanding the context of the conversation. We have another system that is taking the context of the conversation and building these long-range plans that you can, again, audit, modify, change, and interact with. And then after it's kind of come up with its sequence of steps that it wants to do. So for this example, it's looking at JPM. It's looking at other retail banking stocks. It's getting every news article, earnings summary, corporate filing, et cetera, any sell-side reports that was uploaded for this for each of these stocks. Then it's generating criteria, showcasing that criteria, explaining what the weighting for that criteria is, why, and then you're getting the final output. So number one, you can kind of see, all right, where's my thought process? But number two, when it produces that final output, we use kind of, I think of it as a sort of committee approach to getting high quality responses. You've basically got one element of the process, one element of the LM, whose job is to basically produce the output. You've got another one whose job is to basically look at the set of facts that we're stating. And then you've got another one whose job is basically evaluate and fact check, are those facts correct? So for this example, we made a claim that JP Morgan Chase, let me look at an example here, made appointed a new CTO. We made a claim about focus on AI. We made a claim about the launch of fractional shares trading. And the way it kind of works is you've got step one that's making that utterance. Step two, there's a system that's basically saying, okay, this is a fact I need to double check. And then step three, you're basically going out, finding sources of data to verify that information. And then basically evaluating, okay, based on the source of information, the source of data I got, is this information actually true? And so by having these kind of different parts of the process fighting with each other, you can end up with much higher quality output. The chance of it being correct, valid, and verifiable ends up being very, very high, which we also think is quite critical for integrating this into your process in the financial space. Last but not least, I'll maybe just blast through a few slightly more quantitative examples. So I did one here with Dexum that I showed a little bit earlier. You could also come into this and say, look at something like analyzing a bunch of ratios between a few companies. So let's say I wanted to put on a pair trade. Maybe I do one element where I'm doing a fundamental analysis on what I think this pair trade should look like. But then I have another one in here that is looking at different ratios for these companies, coming up with what it thinks is the comfortable band. And if something changes with these ratios, where they're no longer trading together in a way I would have expected, it can notify me and tell me. And producing these kinds of dashboards is also really, really easy. I can come in and say, I can come in and just say, show me a histogram of blah, blah company's revenue over the past few years. I could say, run through every company that mentioned generative AI in Q2 of 2023 and show me what their average revenue looked like over the past few years. I could come in and say, look at CPI, look at change in CPI over the past few years and the types of companies that did well when CPI spiked. Whatever it is, there's, I think, a lot of folks in the space that are spending a lot of time in Python and other code-based approaches to try to build out these different dashboards. With this technology now, it can be really fast, quick, and easy to basically generate different types of visualizations for what you're trying to do really, really quickly. See if I have like another quick example. Cool. Yeah. So this is one I brought out for like AVGO, just looking at a bunch of different stats, different prices, price change over time, a bunch of financial metrics, earnings call summaries, revenue breakdowns, revenue comparisons to its competitors, et cetera. And again, just for really, really easy, punch in a few different characters and you've got these beautiful little generated graphics, but you've also now got a system that's both monitoring anything that's changing from the text standpoint, but also if anything changes from a numerical standpoint with any of these numbers, it's going to let me know. So with that said, I kind of blasted through a bunch of different examples, high level. Hope this will encourage some questions. Maybe I'll turn it over to you, Fraser, and we can start getting through some audience questions.
For sure. Thanks for walking through this stuff, Josh. I think, my interpretation is that all AI is saving people time. Generative AI, normal AI, and so certainly agentic AI is also doing the same thing. But where I think the kind of real power is that the continuous monitoring. So you're kind of always ready. You're always on top of stuff and kind of doing that work for you in the background. Is very powerful and certainly where it's thinking like you. So kind of just doing your existing process, nothing more or nothing, nothing less. And I think it's very helpful for folks to kind of continue to scale their processes. One thing that we didn't necessarily cover here is about the finance specificity of these tools and how important it is to have tools that are specific to finance. Can you kind of cover a little bit about that?
Yeah, so it's actually a really big topic. I saw someone from the audience asked about time series data. That's actually a really good example of something that you need to be, I think, value add in this space. So one thing I think that sets our technology apart is we dealt with time series data from a very early stage. Our LMs are aware and able to handle both numerical data and also unstructured data. I think the other element, though, that's really interesting here is there's this element of change that matters. If I want to find any changes to a pair trade, or if I want to find new M&A opportunities, or if I want to find spikes of risk to some M&A transaction occurring or whatever. What you really want to know is like what's different. What happened in the past 24 hours, 72 hours, week, whatever, that was different from what the market knew before. And so that ability to kind of capture the entire space, have some context of what existed before, and then analyze and understand what's new, what the delta is, that's a big thing. Hallucinations and having accurate output and confidence in what the system is showing is also vital. And so we think about that kind of from three different approaches. Number one, the work log, where you can audit and see every piece of work the machine is doing, every piece of data it's grabbing, and how it's thinking about that work. Number two, there's a citation on an output associated with any piece of information it gave. And then number three, we're very, very good at producing accurate information. You may get a workflow that doesn't make sense. We may grab the wrong piece of data, but if you have a workflow that makes sense, that follows your process, that follows how you think about the world, if the machine is grabbing the right set of data, then the quality of the output you get at the end and the accuracy of that output is very, very high. And then I think the last thing is this element of just as you're building models in a space, it's very different in finance from other spaces. The technical word is non-stationarity, but to put it in more general terms, if I had $1 billion of revenue in 1990, that means something fundamentally different than having $1 billion of revenue today. If I had $1 trillion market cap a number of years ago, that's different than having $1 trillion market cap today. And so also just as you're building this technology, you need to build it in a way where it's dynamic and can kind of be constantly learning the changes and the regime changes, for lack of a better word, how the world is changing on a continuous basis. And that's something we've embedded in our technology in a really good standpoint. So, kind of going through it, we can analyze a huge amount of information, far more information than most generative systems. Our average automation, we can analyze anything from tens of thousands or hundreds of thousands of pieces of text, words, all the way up to, some automations I've seen that are analyzing as much as 50 million words on a daily basis. That ability to kind of be elastic in how much we're analyzing, the ability to do this on a continuous basis and monitor, the ability to handle numerical data as well as text data, and the ability to be very accurate and auditable. These are all things that we see as key to being successful in finance.
Yeah, awesome. One of the questions we've got here is, what do you think some of the key milestones financial services firms are going to have to hit to start enabling agentic AI in a successful way in the future?
Sorry, repeat that question again. And then Fraser, actually, I love the questions that are coming up on the Zoom. So I need to go through those. But so can you repeat that question one more time?
Sure. What are some of the key milestones that financial services firms are going to have to hit to start, leveraging agentic AI themselves and doing it successfully?
Yeah, I think the biggest thing is what we're finding with users is we often start by finding some ways to save time. I think it's the biggest thing is we want to come in and we need to find a few like easy tasks that we can automate. But what we're finding the biggest staying power is when we're actually able to add on to a process, when we're able to add a piece of analysis that wasn't possible before this, when we're able to add a key piece of information, when we're able to maybe help verify, help you sleep a little bit better at night, whatever, that's when you get the really key value. It's completely different to every user. Everyone has a slightly different process from everyone else, which is why the ability to kind of train and scale these things and teach them how to think the way that you think is so important. But the sort of easy answer to your question is, if you can think through your process, if you can think through things you'd like to improve in your process, agentic AI can be a very powerful tool for that. So we start with the time saving, but you're going to stay because we've made you a little bit better at something, in some small or big way.
Sure.
I'd
Lunch
love to
here, so I'll let
take.
you jump
Yeah,
on.
I'm gonna start answering the question, and we'll circle back to those that were sent ahead of time.
Sure.
Dynamic search that will notify you when stocks come within radar of what you're looking for instead of static search. Yeah, absolutely. I mean, that's one of the key things related to monitoring. Does the platform support credit research, or is it mostly geared to equities? Okay, so from a credit standpoint, we don't have information on corporate bonds directly. I mean, we can kind of get it from SEC filings and things like that. So we're not necessarily super impactful for like munis and things like that. However, we have a huge amount of equity data, so we can be helpful in analyzing changes in risks for corporate bonds and things like that. And then also what we're finding is, from a macro standpoint, we can be really valuable. You can do a lot of sort of fundamental bottoms-up analysis on how things are changing. So you could use our system as an example to track how are companies talking about rising delinquency over time. Or you could use our system to look at a company and see if there's any changes, FINRA notes, or if there's anything happening with a lawsuit or something like that. Or you could use our technology to look at changes in consumer spending over time, or look at how many companies are financially distressed over time as interest rates go up. And so there's a lot of ways that we can be valuable from a credit standpoint. We don't have corporate bonds directly integrated into the system, but depending on your workflow, we've found quite a few ways we can be value add. So that probably requires more than a 30-second answer from me really quickly. You probably want to know a little bit more about the individual's process. But if you're interested in that, please feel free to chat with us. We'd love to talk about how it can be helpful from a credit standpoint. Stocks entering an index, or when it was announced, continuous monitoring. Yeah, absolutely. Kind of funny you asked that question. We've got a few users that are building things very similar to that. So you could come in, kind of teach the system what the methodology is for some indexes that you're interested in. It could tell you about companies that look like they match the requirements of that index. And then absolutely, if stock enters the index, exits the index, anything kind of related. There's a bunch of different automations related to entering or exiting an index, or being likely to enter or exit an index, that you can build in the system. Yeah, so and then see a few variations of questions related to can you grab different types of information? Yes, so you can upload basically any kind of unstructured text into the system. The system will go through that unstructured text, parse out what it thinks is interesting. It'll try to figure out when that text is from, which companies, if any, it's being talked about, and a bunch of other cool stuff, and then you can build it right into your automation. So yeah, you could throw in investor presentations, you could throw in sell-side research, you could throw in reports from expert networks, you could throw in internal notes that you've taken on companies from channel checks or management calls or whatever. System can suck all of that up and use it as part of its analysis. I see a question about custom variables. I see we've got a classic Boosted user here. Yeah, absolutely. So any variable that exists in Boosted 1, you can use in Boosted 4. And so this actually makes stock filtering much more powerful in Boosted 4 than like our traditional disco blocks, because you can also come in and like give it math. I could come in and say, I want you to find, I don't know, all the companies where they have a volume of X, where the change in revenue over the past 4 quarters is Y, where the company mentioned a green shoot, and where they had a 3-year run of positive momentum, and their revenue has been negative over the past year. Excuse me for not being very creative, but the point is, all the data you saw in Boosted 1, you can absolutely use in Boosted 4, and that actually lets you build out some very powerful types of filtering. Yeah, I see a question here about regime changes and pattern recognition. Yeah, I think what's really, really powerful about this is in my opinion, this is the first time you actually can model regime changes in a sort of systematic way. I guess there's been ways you could tackle it before, but I think the sort of like restriction in just looking at stocks, right? If we go back to like 2020, the old school way we think about this was like the bar risk factors or things like that, right? So like value, um, momentum, trade activity, et cetera. And that kind of broke down, right? Like in 2001, 2008, the right thing to do was to sell momentum stocks and buy value stocks. Well, if you did that in 2020, you know, you sold Zoom and Google and bought SPG and probably had a terrible trade. The other way people historically tried to do this was thinking about covariance between different set of stocks. Well, same kind of thing. Over the past 2 years, we've seen a bunch of weird things that kind of broke that model, right? In 2020, you had fitness equipment companies heavily correlated with retirement homes. You had a situation past 2 years where the first time since 1988, bonds and equities both decreased at the same time. And so if you're trying to use these more like traditional quantitative-based approaches or correlation-based approaches, you've had a really hard time modeling risk in the market for the past few years. I think what's really powerful about LM technology is it can understand that entire context. It can come in, apply some reasoning, understand the context of what's happening, and from there make predictions about what risk is and where it can go. And side note, that is something you can backtest in our system as well. You can come in and try to build out questions around different types of risks over time and see how it does. And I think it does a fantastic job. So yeah, a lot of different ways to think about that and a lot of different ways to think about regime changes. A lot of what I showed you today was around more of a fundamental use case of here's what's happening with earnings calls and here's some of the emerging things that are happening. But there's a ton of ways you can think about it from a quantitative standpoint as well. And I think it can give you a really interesting orthogonal way to model risk that's different. Yeah, and then can you look back on how the stock's earnings data, et cetera? Yeah, so absolutely. You can combine your own data with alpha data. Behind the scenes, so we have about 200,000 data sources in our system. We've got data from S&P. I think we've got some data from like FactSet. We've got ESG data. We've got short interest data, just a whole bunch of really high value data sets integrated in the system that you can use. And then you also have the ability to integrate your own structured data or unstructured data. Would it be valuable to add this data behind the chart that you can highlight? Yeah, so absolutely. I guess like the other thing I should just really quickly show about everything on the screen is everything that gets produced, you can also download, right? So I'll like here. So this is a really boring example. I've got here price correlation between JPM and Wells Fargo. Click that and poof, this turns into an Excel. With all the data that led into it. You know, when I made something related to my S&P analysis, same kind of thing, boom, this turns into a Word doc, and now I can integrate and use it however I want. So you can build some of these things into the charts themselves, but also any piece of data that we're showing, you can actually download, get access to, and interact with and integrate with other systems. So that both makes it easy to do stuff here, but if you have other workflows, very, very easy to integrate with that as well. Cool. How impactful is the system in monitoring data for global equities, non-US? Yeah, so we cover 35,000 securities, including, you know, pretty much every major market. I think I had an example, one of my agents somewhere, that was looking at like Chinese. Yeah, so this is looking at like Chinese companies as an example. This is looking at Chinese companies that are being affected by domestic steel demand. And let me see if I can find like some cool Chinese data as part of this. Okay, yeah, so this is probably Chinese. Yeah, and then you can see it's like sucked in a bunch of Chinese articles as part of this. So pretty strong coverage. Our best coverage is North America, followed by Europe, followed by APAC, but we do cover every major market in the world except for Russia. And we cover a huge number of languages as part of that, and like pretty decent coverage. Even for some smaller markets. And you know, kind of backing that up, we have clients in China, we have clients in Indonesia, we have clients in the UAE. So there really is kind of global penetration of this, and we can handle quite a lot of things. Cool. All right. I think I blasted through all of them from the Zoom chat. Apologize, Fraser. Why don't we go back to the questions that you had gotten ahead of time?
For sure. Thanks, Josh. It's good to have such great participation. So thank you, everybody, for the questions. I think this is kind of an interesting one that we see a lot, but the person's asking, how is this useful for the sell side? I think a lot of what we're talking about is kind of like buy side, helping people save time and pick stocks and kind of do some selection, but it'd be great to talk a little bit more about sell side.
Yeah, so a bunch of different ways this is valuable, and the sell side is that's a very wide question. There's a lot of different personas on the sell side. Kind of, I'd sort of break it into a few categories, and it's not too dissimilar from the buy side in this way, in that you've got automating some tasks. So there's going to be some basic like monitoring, reporting, continuous sort of like drudgery work that can be done by the system. You can use it to do certain types of answer certain types of questions. Client calls you up, why is the stock down? Maybe you know the answer instantly, maybe you don't. You can use this to analyze literally everything all at once. You can analyze all the technical factors. You can analyze everything happening, if there are any corporate filings. You can analyze anything happening in the news. You can analyze macro news that might be affecting the company. You can analyze any other research. I mean, literally just quick, instant, boom, let me analyze everything that exists for the stock and see what's happening. So answering research questions. The other thing that we're kind of finding on the research side is, again, weaponizing more data in a way that you really couldn't today. So today, maybe you're analyzing a few pieces of data. With this now, maybe I'm covering a pharmaceutical company. I could use this to look at every filing that's being made. I could upload any information about IP related to the company. I could upload any research, things happening in medical journals. I could upload any kind of context that I know exists on these companies, and both A, on a continuous basis, if something interesting happens that matters, let me know about it, and B, just ask one-off questions or doing some research. It can kind of speed that up. And then, the final category is if you're more like macro coverage, using this to do kind of like bottom-up analysis. So if I'm covering a particular sector, if I'm covering maybe a geography, whatever, analyze every single stock in that sector, find the biggest commonalities across the corporate filings or earnings or whatever, bubble that up, and then it can be a baseline for some of the research that I'm doing. So a bunch of different variations of that, but in some ways it's not that dissimilar from the buy side. It's just the way in which it's being operationalized is a little bit different. Cool. All right, great question.
Yeah, like I mean, it really it's just kind of I think boils down to the same sort of issue: being ready, being kind of always on top of everything, and having this kind of continuous flag that's doing some of this work for you. Um, and to your point, I guess it's sort of buy side, sell side. Everybody can benefit from those sorts of types of automation. So I think really interesting there. Um, we've covered a lot about the specific use cases, but like the kind of overwhelming question that people are asking in these previous chats and these other chats is just about use cases. I think of AI overall, it's still kind of a new-ish concept for a lot of people, and especially agentic AI. If you could boil it down to the top 3 to 5 use cases that you're seeing people like getting value in today, um, that we're talking to clients about, that people are sort of getting this value in, how would you describe those in kind of one sentence?
Yeah, I'll do my best to be succinct. I guess a comment I'll make before I give the succinct answer is it really depends on the persona. So I'm going to talk about this from the perspective of like a fundamental professional manager. But if you're a wealth manager, if you're a quant, if you're a generalist, it may look a little different. But on the assumption that you're fundamental, kind of 3 things: taking a hypothesis about a company, verifying that hypothesis, and then monitoring it on a continuous basis for anything that can change. Answering a specific question you have in a way that wasn't fundamentally possible before by looking at a huge amount of information. So again, going back to that Blackwell example I talked about before, another example might be analyzing a particular market or analyzing something that's happening with a pair trade or something. So answering a specific question in a way that was really hard to do before. And then the last one is really just like using it as a way to kind of exert agency on the set of information that you're feeding every day. Almost everyone I meet on that side, spending 3 to 4, maybe more hours a day, just constantly consuming information. And there may be things that could be valuable. Let's say you cover 20 stocks, and that there's a universe of 50 stocks that could affect those, or maybe there's a universe of 100 stocks that could affect those. Or maybe you cover 20 stocks and 5 of them are reporting in the same night. Using this as a way to sort of monitor and analyze all the pieces of information you wish you could look at, but you can't, can be really valuable. So if there's a night where there's 5 different earnings calls happening, you're going to listen to one, you can use alpha to listen to the other 4. If there's 20 earnings calls or 30 earnings calls happening in a week or a night that could affect you, you're going to focus on the top 5 that you cover directly. You can use alpha to analyze and look for anything that you think might be important across the other ones, things like that. So verifying a hypothesis, answering key questions, exerting agency on information that may or may not be valuable, and getting that information only when it is valuable.
Yeah, that's great. We're running a little bit towards the end here, so I think we'll just do one last question, give people a few minutes back at the very end so they can run and grab lunch. Really appreciate people joining us today and sticking around and asking some great questions. But I think this is kind of an interesting question in terms of how we describe things and what it is that it's actually doing behind the scenes. The person is asking, do you think AI is something new in finance or just kind of another name for things that we are already used to?
I mean, I think this is a massive shift from what happened before. I think you're hitting a point where it's become really obvious how this can integrate and change things. I'd say probably like the biggest kind of high level changes, there's kind of 3 things. Number one, the first wave of AI, it was really black box. Like it could maybe make some good predictions, maybe make some money sometimes, but you had no idea why it was making the decisions it was making. And so that made it really hard for a lot of the world to incorporate it. This is the opposite of black box. This can clearly articulate every piece of reasoning for a decision that it's making. So then your next level is you think about generative AI, which is a little more clear. The problem with the first wave of generative AI is that it was too general, too non-specific. It couldn't customize to the user's needs. And I think that was one of the biggest challenges we found with that first wave of the product too, was, it worked fantastic for a generalist. But as soon as you started getting to specialists, everyone has a very different way of viewing the world. And where this is very different from what came before is that you can literally put your brain into the machine. You can literally teach it, here's exactly how I think. And then it's going to do that on a continuous basis, which then leads to, I think, the third thing that's really different, which is the ability for this to do work on a continuous basis. Most generative systems today are, you ask a question, you get an answer. Our goal really is to try to build automations and continuous work. We're trying to build workers that are basically doing work and valuable work for you on a go forward basis. And then the last comment I want to make on that is like, this is the first version. This is like the baby version of this technology. It's already insanely powerful. But where I see the technology going, it's going to feel more and more like a teammate as time goes on. It's going to feel more like a system that proactively reaches out to you. Today, you build automations, you teach the system and automations that are valuable. Over the next year, I think you're going to get to a world where the system's automatically building automations for you without you even having to think about it. It's just going to learn who you are, how you invest, how you care, and it's going to find ways to proactively save you time. And that technology sounds like science fiction, but it is possible now, and it is being developed and worked on right now. And so, yeah, to me, the concept of AI has existed for a long time, right? We've had the concept of golems and robots going back to like the Romans, but this technology feels very fundamentally different from what came before.
Couldn't agree more. Thank you so much, Josh, for walking us through kind of the promise and what we see next for agentic AI in the world of finance and capital markets. And thank you, everybody, for joining. Really appreciate it. And hope you all have a great Wednesday.
Thanks, everyone.
Bye, everybody.